People are making so much money trying to speculate and call a shot. If you would have asked me this question 6 months ago, I would have thought that you were, crazy. Those saying there's going to be, 5, 6, 7 rate hikes. I just didn't see it. And here we are. I was expecting, 1.5% uptick, and we're at over 300 now. So it's been a big jump. What we're seeing is inflation kind of stabilize, and hopefully it'll kind of come through next year. That brings, a little bit of hope towards the extent to which they'll have to hike rates. And then as things kind of go through time and inflation comes back down, we'll start seeing the 5 and 10 year money kind of go down a little bit, which gives an opportunity to lock in rates. And I think that's where we stand. But I could be wrong. If inflation spikes out of control again, they'll have no choice but to increase rates. And, right now the Fed doesn't want to hear anything from anyone about a recession or whatnot. So they're just hiking and hiking till something breaks. And it's a tough environment. You just don't fight the Fed right now. So that's where we
No.
stand.
Hello, and welcome back to the Very Real Estate Effect podcast, a show dedicated to real estate investing right here in Quebec. And today I am very happy to have my friend Alex Rossi back on the show. How's it going, Alex?
Great. Thanks for having me back. It's been a busy summer, a busy start to the fall, and excited to, plan ahead for 2023.
Well, exactly. As you said, it's been a busy summer. A lot has happened since. This is your third time on the show, and I'm really excited to do a bit of an update on what you're working on, how things are going. It's obviously the economic environment has evolved, and all of us are now in it, and it's giving us a few challenges. So before we jump into it, I just want to remind everyone, thank you for your continued support. It's really appreciated. Please share this episode with someone who you think could benefit from this conversation. Leave us a rating, send me some comments and some feedback. I try to respond to absolutely everything we get. So, now that being said, for those who haven't listened to the first two episodes where you were on, you're a real estate investor part-time. You still have a full-time job in the financial industry, and you have been very successful in the purchase of new construction. And the last time you were on, you were working on various projects, and I hope you can give us a little bit of an update. So first of all, like, what was your last project and how's it going?
Things are well. Things are challenging. Things are exciting. I think it's a combination of those three elements in one. Last time we spoke earlier in the late spring, we discussed upcoming projects in the Gatineau area, which is, my core. It's where I do all my deals, and I love the Ottawa market. I love the Canada capital market. I love all the immigrants coming into that region, where you have the benefit of being in a city that's bilingual, so it attracts, talent and immigration that's English and French.
Mm-hmm.
So it's still my favorite market. It's still my core market. And what's interesting about that market is it used to be like a secondary market, and there was less appetite for the Gatineau area. It was less affluent. It was less developed. But it just seems that every time I take a drive there and, look at the infrastructure that's being put up, it's exciting. There's a lot going up, and people don't often think about that market. But every time I go there, I leave there more satisfied and more excited than ever before.
Oh, well, that's good news. And you're absolutely right. Like Gatineau for years has been a bit underrated and kind of put aside. And a lot of the emphasis in the province was on Quebec, on Montreal, I was going to say Sherbrooke, Trois-Rivières, and so on. And now Gatineau, and it's been a few years, the prices have definitely started to creep up. And there's an influx, as you said, of people moving there from other cities and from immigrants coming into town. So you've always been bullish on the area, and you've been quite successful in finding projects that are new construction. So is that still the case now? Like, what are you working on?
Absolutely. So I'm working on 32 door projects in that area. There's kind of a community that's being built. There's 5 to 6 various phases. Right now, I'm working on 3 of them, potentially a fourth, depending on, the future of rates and the magic,
Yeah.
figure that we're all hoping comes down at some point next year based on the inflation figures that we're going to get in the upcoming quarters. So I'm putting all my efforts. I'm going, all into the 32 doors. They have underground parkings, elevators. It's a very, premium type product that's giving the best type of, return for my investors. And what we're seeing in that area is that more and more people want kind of that turnkey, you know, luxury elevators, appliances included, quartz countertop, rain shower, all these different, almost luxury finishings is something that I really look for. And that's
Hmm.
definitely something that's coming through in my projects.
Yeah, and that really does allow you to go and capture a premium in terms of rent because it's you build rental units, it's condo finishes, and I've always been well surprised and not surprised is that people are willing to pay more for better quality dwellings, and with a new construction like that, the quality of tenants that you attract is also quite superior. So it does really make sense, and knowing that once the property is finished building, you rent it out, it's fully stabilized, like it's pretty I was gonna say uneventful for quite a few years.
Exactly. And in the first 5 years, don't forget the beauty of the pre-construction market is that you don't have any, ceiling on your end. So you can kind of decide what the rent you want to charge is. And what's interesting about what I do is because I have, Wi-Fi included, appliances included, I don't really have a market to compare to. So I can kind of bump up my rents to whatever rates I feel appropriate as long the market can take it. And as long as the tenants already living there are going to accept on the increases. So
Hmm.
that's the beauty. I don't have to worry about a Régie du Logement that says, well, you could only up 3%. No, I need 5 or 6 so that I optimize that return on investment and that my investors are happy with what I've done for them.
Yeah, and so if we backtrack a little bit, like first of all, to kind of go back on that project from the beginning, like how do you find it?
So I believe in the first episode or the second episode we did together, I discussed the successful 26 unit project and then another 26 unit project I did with one of my investors. It's a relationship game for the new construction market. And basically, the developer who originally sold me the 226s came back and said, hey, I'm doing another project very similar. It's 32 doors, a little bit of a higher end product. I'm getting into the elevator underground parking space, which elevates that rent you get and the price you're going to pay. However, but it was truly a relationship game. They came back to me and said, "You're really easy to do business with. The transaction went smooth. We'd love to have you on the next deal." Because the challenge we're seeing right now, Axel, is that the developers know how good these investments are. They're keeping them to themselves.
Yeah.
So they're not selling them to investors such as myself or you anymore. They're keeping them to themselves.
Hmm.
And that creates a much more difficult market to find and identify these opportunities because there's less and less of them. But, I'm the guy to do that.
Yeah, and it makes total sense to kind of partner up or purchase this opportunity from a developer who's going to be doing all the groundwork when it comes to the land, to zoning, to dealing with the city, and then really what you have to put in place is the financing so they can go out and build. As you said, like otherwise, if other than selling it to an investor who's easy to work with, like you, they just keep it to themselves and then they'll offload it once it's been stabilized after 3-4 years. So the
Exactly.
that type of project is getting more and more rare for the quality of the building you're purchasing.
Exactly. And what I'm noticing now in the market is now more than ever before, if you don't have these existing established relationships with new construction builders and you don't have a track record and you don't have, your banker in place and your property management in place and a demonstrated track record, such as I've done successfully with myself and investors in the past, they're like, well, you know what? I don't want to take on that risk in selling to you because more and more people don't have the skill set to close, and then either they need more down payment, they're late to close, things don't go smoothly, and the developers don't want that. They don't need an added risk and added uncertainty to bring on a new investor they've never done business with.
Mhm.
So they're not taking on virgin investors, which is great for myself and my investors, but difficult for newcomers that want to penetrate that market.
Yeah, yeah. And so if we dive in a little bit more, like, okay, so you found it was a pre-existing relationship. They approached you with it. What is their responsibility and what is your responsibility into the deal? Like where is the line drawn in between the two of you?
So how I like to see it now, it's becoming more of a partnership between the investor and between the builder, right? Because there's a lot of moving parts in these types of projects. The biggest variable right now that's stressing many investors, builders, and investors is the rising rates that we've had. And we've had, look at the 5-year Canada bond. It was at like 1.5, and now we're at 3.5. We've had a 300 basis point swing in, 6 to 8 months. It's causing a lot of headaches and trouble. So the responsibility on my end is to ensure the financing goes through, locking in those rates, ensuring we get the right rents, optimizing the rents. And the developer's responsibility really is to kind of honor and listen to what the needs of the investor are. So if we go to them and say, hey, we want for appliances included, or hey, for these units we don't want appliances included, or we think that we'll get a better return, risk return if we put in Wi-Fi because we're going to get more rent. Can you please include, Wi-Fi cable? So there's a lot of communication that goes even between the time you sign a contract and the time that you disperse at the notary. And the crucial element is really when both come together and both cooperate, because at the end of the day, we want the same thing. The developer wants to sell and close, and the investor wants to, optimize the return and buy and close. So it's really like, we have to be on the same page, and alignment is key.
Yeah. And every time speaking to you, I'm like, man, I like the way Alex Rossi does it. I feel like I go through so much trouble because I actually handle some of the projects myself. So it's so much more labor intensive and time consuming. But on your side, the way you structure it, you're really just responsible for the financing, and then you put it in place. Then what? It's a 14-month build.
It's usually about a 12 to 18 month build. Sometimes you get in later in the phase if another investor has pulled out because they don't qualify, and then it could be a 6 to 9 month turnaround. Sometimes that's interesting too, because you have a little bit more clarity of where the market's at for rents and where the market's at for interest rates. And sometimes you can negotiate a better price because they're a little bit frustrated that the previous investor had to back out, and then I'm there to rescue them. So
Yeah.
I get better terms and conditions. So that's also something that interests me.
For sure, for sure. No, that's a really good way to put it. So right now you're working on this project. What is the expected delivery date?
So the expected delivery date of the 32 unit new construction project is July of 2023.
Okay, so about a year from now, a little bit less than a year from now. Okay, and they seem like they're going to be on target, like on the land right now. What's happening? Have they done the excavation?
We're pretty much up at the first and second floor, and things
Oh,
are moving exactly as planned. What I love about this developer is they're rarely, late, and they're very good at forecasting their budget as well as the time frame. And other than maybe maximum a month delay, there's nothing, that's been disappointing in the past, which gives me more appetite to continue with them. Yeah.
for sure, for sure. No, and as you said, like you have a really good relationship. Everyone is meeting their end of the bargain, so that's it's really beneficial to everyone. Now, you said there's multiple phases. Like this is one of many. Are you hoping to jump on another building afterwards with them as well?
Right. So they kind of have a parcel of land where they build and repeat the same project, and it's approved by the city. That's another challenge, right? Getting the appropriate zoning and approval. So once they get one approved and they have the land, they'll do, 4, 5, 6 of the same exact building.
Yeah.
So once a success, then I'll go in to do a second and a third, and kind of layer it out through time so that you have a little bit less interest rate sensitivity, because 2, 3 months could be a massive change in rates, right? So it kind of helps de-risk.
I was going to say on your side, when it comes to interest rate, because with your background in finance, you also get a lot of research by some experts, and no one has a crystal ball. And I mean, it's not here on this podcast that we're going to be able to, give some deep economic analysis. But what are you hearing when it comes to obviously inflation and interest rates and the forecast for the next like 18 months?
And that's the $1 billion question we're all
Yeah.
asking ourselves. People are making so much money trying to speculate and call a shot. If you would have asked me this question 6 months ago, I would have thought that you were, crazy. Those saying there's going to be, 5, 6, 7 rate hikes. I just didn't see it. And here we are. I was expecting, 1.5% uptick, and we're at over 300 now. So it's been a big jump. What we're seeing is inflation kind of stabilize, and hopefully it'll kind of come through next year. That brings, a little bit of hope towards the extent to which they'll have to hike rates. And then as things kind of go through time and inflation comes back down, we'll start seeing the 5 and 10 year money kind of go down a little bit, which gives an opportunity to lock in rates. And I think that's where we stand. But I could be wrong. If inflation spikes out of control again, they'll have no choice but to increase rates. And, right now the Fed doesn't want to hear anything from anyone about a recession or whatnot. So they're just hiking and hiking till something breaks. And it's a tough environment. You just don't fight the Fed right now. So that's where we stand.
No, and my, I was gonna say my hope, as good as hope as good as hope is just that once inflation has been under control, then rates are slowly going to start to come back down within about 12 to 18 months. But again,
right. Or if we enter a recession, shortly, they'll have no choice but to kind of lower and re-stimulate, and the cycle continues. So,
and it's interesting because then it kind of puts pressure on us real estate investors of, okay, well, if it's going to be like that for the next 18 months, like what kind of project does make sense? And we've all heard of like large developers putting their projects on pause, even repackaging and reselling. So it definitely does add some uncertainty, and it pushes us to be more and more creative. So have you started to look at other methods or other types of projects that make sense to you?
Projects? No, I really have my eyes on these just because of the amount of commitment and effort that's been, done with the builder. Worst case scenario, we could always, delay the project and hope that rates come down. Delay it maybe 3 months, and hopefully then it takes us through the fall next year, and we'll anticipate kind of a better opportunity. The danger with that is if they don't come down, you still have to kind of close, and then you need to raise more capital. But what we're also seeing is rents are really rising. So they're going up. And what's happening with that is that it offsets a little bit of the damage done from the rising rates we've seen. And if everyone stops building and we're in an environment where there's not enough housing, people can't afford to buy homes, or people are getting forced out of their homes, well, then there's more of an appetite for rent. So there's many moving parts in the pre-construction, and that's the beauty. But at the same time, there's headaches with that.
Yeah, and it definitely causes some uncertainty. And I love that you say that, a lot of builders are putting their projects on pause. And as you said, it's lowering the supply of new dwellings, yet Canada has never given as many immigration visas as this year in 2022. So really we're naturally putting pressure on rents because we're not building enough. So I know I'm having that reasoning also for my project in Saint-Jérôme, where it's a bit delayed. We're starting actually this week the land cleanup and so on, and that's really exciting. And I keep thinking that the project is going to be even more valuable when it's finished because of everything we just discussed. So it's not a waiting game. It's just how long can you withstand? Because once you come out, that project will be even better than on paper 6 months ago.
Exactly. And I think those that are nervous right now and not getting into the market, well, it brings a better opportunity for those that are taking the opportunity to get in, because there's more wiggle room right now. There's more flexibility. There's more price negotiation than there was, a year or two ago when everything was just, on fire. So if you're really, really structured and disciplined and know what to do in this environment, those investors that are just staying laser focused are going to come out of it. And once rates come back down and things kind of normalize again, they're going to reap the rewards in 5 years. And when we look at inflation and how it affects real assets, such as obviously real estate, it helps it increase in value. We see that inflation actually helps real estate. It's just difficult to see that now with the rates being up and the amount of down payment you need to close. So it's a little bit of a double-edged sword right now.
No, absolutely. And as as you mentioned, like right now, it puts more uncertainty on us, the investors, in terms of more capital that's required for the down payment. But at the same time, and this is how sometimes I rationalize it, is that 3 years from now, 5 years from now, am I gonna think like, it wasn't such good of a deal because I had to put 150K more? No, I'm gonna be happy. That project will have made sense. So again, like it's a long run game, and I need to remind myself not to be phased out by what's happening in the short-term economic environment.
Exactly.
Mm. So on top of that, like you also have some condos in Griffintown. Are you planning to sell any of them?
Right now, I would say the answer is no. It's
Yeah.
a firm no. There's just no appetite. I'm not going to discount them just because, oh my God, I can't get a mortgage and everyone's panicking. Like they're new construction condos, they're brand new. I'll keep them for the long run and
Yeah.
they're paying themselves off. I don't have any problems holding. Worst case, you got to be patient too. Everyone thinks that they're going to get rich overnight and just sign a contract and make money. Sometimes it's tough. You got to hold, you got to be patient, you got to be disciplined. You got to sit back and really look at the numbers and say, okay, well, even if it doesn't go up for 5 years, I'm still paying my mortgage down or I'm still getting a positive surplus on my cash flow. And that's pretty much the game we're in right now.
Yeah, and we have to capitalize. And so I don't know what kind of financing you had on that, but if you had flexible and your rates has been increasing, then you're obviously capitalizing less because you're paying more interest. But as you said, you got to keep those units for as long as possible. And it's
Right.
tempting after 3 years to want to sell them, but you got to stick with it because 15 years from now, you'll have made a much better return.
Exactly. And I mean, I did call the shot wrong. I do make mistakes.
We
The
all
most
do.
successful of us make mistakes. I have multiple of them that were variable, and now you're looking at the payment that's all interest, right? So it's not fun anymore. You're basically paying it all to interest. But I made the decision that long-term variables should always outperform the fixed, and it sucks right now. But if I were to hold variable mortgages throughout my career and do this for 25 years, I'm confident I'll come out winning. It's just when you look at that very short-term window, it's like, oh, this sucks. And
Yeah.
people are getting called out. They got to up the payment they're making because they've reached the strike rate. And it sucks. I'm not going to lie. It's painful. It sucks.
Hmm.
But when you understand that long-term game and that, I made the decision to take mostly variable because long-term it outperforms fixed. Well, I'm sticking to my strategy. I'm not panicking and I'm not going to back and deviate from my, strategy.
Yeah, and that's the important thing to do. And that's where the mindset comes in because it can be tempting to make some drastic decisions when things change. But as you said, like in the long run, it will outperform. So you just got to stick with it. And even if that wipes out part of your cash flow for now, you just got to stay strong.
Correct. And on the flip side, though, like that's on the residential pre-construction side, right? Condos are
Hmm.
are you can get a variable or a fix, and the terms are much different. But on the commercial side of real estate, so 6 units and more, CMHC insured, you don't have a variable mortgage, so you don't have that added stress about is my payment going to go up as rates go up. Once you've locked that rate in, it's there for 3, 5, 10 years.
Yeah.
So you don't have that uncertainty to worry about.
Hmm. Hmm. And it'll be interesting. And that's why like I'm happy that you come on regularly because you give us a bit of an update. And I really like the type and quality of the projects that you're doing. So I look forward for you to come back in a couple of months again and see where it's at, how much you've grown your portfolio with the changing environment. And I know I keep repeating this, but a lot of us, and I include myself, in the last like 4 or 5 years, we've all benefited from a rising tide which lifts all ships. It's just that now that kind of the music has slowed or stopped, we're gonna need to be able to withstand it and go through the storm.
Right. And I think the next filming we'll do is I'd be excited to do this in one of the units and kind of show you guys around and all the things I talk about. And I'd love to demonstrate that to you and show you the type of furnishings I put in and the
Yeah.
appliances, just the type of project. Sometimes we don't, really appreciate or understand until we see the final
Yeah.
product.
Until we get to walk around the unit. And that's what I love about real estate is the tangible side of the investment. You can own shares in Apple, like other than using your phone, you never get to touch it, right? Whereas real estate, well, it's got a real tangible side to it. And I know in some condos, I've been so happy to cut the lawn and water the grass and stuff like that, just because I feel like I'm forcing appreciation. So not really in that case with the grass, but
You're
it's
in control of your returns.
yeah, exactly. Exactly. So now that being said, I have one last question for you. Like you've always been super consistent with your strategy. If you needed to right now, let's say like there wasn't no more new construction projects starting. Do you have an idea of like what other domain or type of investment or investment class you would go into in real estate?
Basically, if I weren't doing this, what I would do.
Yeah.
I think it would still be in the pre-construction space. Maybe I would consider kind of like shorter term projects. So like maybe somewhere you would do Airbnb or student housing or
Mm-hmm.
shorter term rentals where I would do the same thing, buy the new construction, have high quality finishings, have maybe a lounge, have maybe a little rooftop with barbecues for people to enjoy in the summer. The challenge with that is that CMHC doesn't recognize Airbnb as revenue, so it's a little
Yeah.
bit more tricky, and you got to
Mm.
get creative in the financing. So, not sure I would go down that avenue just because I like more the predictability and the stability of what I do. But that is definitely a market that we're seeing more and more.
Mm-hmm.
Or it could be like furnished units. So
Fully furnished.
fully furnished, it's an extra 250 a month of rent, but pays off the furniture after 2-3 years. So it's
Mm-hmm.
kind of like a
Yeah.
better return on investment. That might be a space that I'll explore more going forward.
Nice. That's good to know, man. Well, maybe next time we'll get to talk about it. Hey, Alex, if anyone wants to get in touch with you, what is the best way to get in contact?
Best way, you'll see me with my construction hat also on Instagram, Alex Rossi 6. Follow me, DM me, engage with me. I also do Psych Wednesday, a little podcast that's fun, cheeky, informative on topics about health, wealth, and happiness. So you can find me there. I also have people approach me on LinkedIn just because it's a more formal and professional, platform. So I'll be under Alexander Rossi on LinkedIn. And those are the two best mediums to reach out and connect with me.
Beautiful. All right, man. Well, again, in a couple of months, you're coming back and let us know how it's all going.
Thanks for having me, Axel.
It's a pleasure every time. Thank you, everyone, for listening. And again, do some research, know your market, make some offers, and most importantly, get educated. Alex Rossi did not become a star overnight. He had to invest in himself, in his learning, in his knowledge, and now it's paying off. So the best investment
Even
you can
even
make.
in a thinking cap, you see.
Exactly.
Yeah.
And a hard hat just in case something falls on your head. There you go. All right. Stay tuned. I'll talk to you next week. Thank you.